तो मैं रिकॉर्डिंग स्टार्ट करता हूँ।
वीडियो स्टार्ट नहीं हो रहा, शेयरिंग नहीं स्टार्ट हो रही है।
Mandar, you can give the rights now to Siddharth.
Good evening, everyone. Thank you for joining us for this webinar, where we will be talking about our new NFO, Mirae Asset, Nifty, EV, and New Age Automotive ETF. The NFO begins today, and it will end on next Friday, which is July 5th. And scheme will again reopen for direct purchase and redemption by 11th, and it will get listed within 5 business days from the date of allotment. So this is one very unique product which we are coming out with. It will target the entire ecosystem of electric vehicles as well as new age automotive vehicles. So in this presentation, what I'll do, I'll just give you some global context, tell you about the ecosystem which exists on the EV side, why India right now is sitting at a very sorts of right moment or cusp from which we believe that EVs and other automotive technologies like hybrids, etc., will grow very significantly. So, if we look globally, electric vehicle adoption has seen a significant upswing in last 4 or 5 years. If we look now, Europe is almost 22% in terms of electric vehicles car share in 2023. China is almost 34%. And the projections are that both Europe and China will be almost 60% by 2030. So you'll have more than 50% cars which are being sold based on pure EV powertrain. Now, India is right now at 2%. If we add hybrid vehicles, EV plus hybrid, that will be around 11%. So, India is the entire electrification is now starting, and we are in a way almost 5-6 years early compared to other developed economies, or other, we are lagging by 5-6 years compared to China or compared to Europe. But I think we have all the right ingredients in place for us to develop quite well in this disruption. Now, reason why electric vehicles is becoming very popular, and I'll come to Indian economy specifically. One is that people now are finding EVs to be practical in terms of ownership. You are seeing cost of electric vehicles going down because battery costs are going down. So you are not only saving on fuel, but also earlier electric vehicles were very costly to own. Now it is not so much. So people are seeing their payback periods getting reduced. Government incentives also helped a lot for EV adoption. There is obviously a more environment friendly audience and customers which these car companies are facing. Also, all these cars, especially autonomous vehicles, while they are in very early phase, are seeing a lot of sorts of interest by people, because it makes the entire driving experience easy. It reduces the accidents. In fact, it reduces the accidents by almost 10 times as per one of the research. So all of these have resulted in quite a bit of traction in electric vehicles globally. So much so that that EVs in last 10 years have almost seen a growth of 46% year on year. The total number of EVs on road right now is almost 40 million, and most of which is electric vehicles. In 2023 itself, there were 14 million EVs which were sold. 14 million, which is 1.4 crores. Just imagine, in 2012, this number was just 4,50,000. And here I am talking about four wheelers specifically. So from 4,50,000 in 2012 to almost 14 million in 2023. And the expectations are that in 2024, almost 17.5 million vehicles will be sold. And most of which, as I mentioned earlier, is battery or operated electric vehicles. Then comes plug-in hybrid vehicles, and then obviously there are very few instances of fuel cell vehicles, which may become popular in later years. And this is also a plan by multiple countries in terms of phasing out of ICE. So there is not only consumer pull now which we are seeing, but also government push, which is resulting in a very quick adoption of electric vehicles globally. And if we look at entire global landscape, every country in fact stands at a different sorts of level when it comes to EV adoption. India is in an early starter phase. Around 5% of vehicles which are sold are electric vehicles. 2% are pure EVs. If we add two-wheelers, three-wheelers, four-wheelers, the number grows to even more, around 8.5%. If you only talk about two-wheelers, it's 5%. So there are a lot of numbers, but roughly, let's say that's the ballpark. US is around 10%. So it's early phase in these countries. When it comes to China, it's already at 38%. Germany is around 24%. And then there are market leaders also like Norway, Sweden, where the adoption rate is much higher. So we are seeing a path, right? That countries, they start with with EV adoption, and as the infrastructure goes, as the government push grows, as EV becomes more affordable, the adoption increases. We are seeing that with China, mainland Europe, and what we are seeing in Scandinavian countries are even more sorts of encouraging, because their numbers are far like on the higher side, around 60% plus on for Sweden, around 93% for Norway, etc. Now, why do we talk about EVs value chain when we are talking about electric vehicles, right? Because at the start of the call, I mentioned that this fund will invest in the entire ecosystem of electric vehicles. Now, the reason behind that is that to create an electric vehicle, to create a hybrid vehicle, lot of underlying component comes into play. In fact, you'll be surprised that 35 to 50% of cost of an electric vehicle is battery itself, which in turn consists of cathode part, anode part, electrolytes, manufacturing, which is battery packaging itself, etc. There are a lot of components like chassis, drivetrain, vehicle body, internet connectivity, car connectivity, etc., which also comes into play. So you have in an EV an entire ecosystem of mining companies, of chemical producing companies, of battery manufacturers, of car component providers, of companies which are providing internet connectivity, car car connectivity, ADAS software, driver assist, etc., and then the automobile manufacturer. So entire ecosystem is important, and not just the vehicle manufacturer. In fact, a good majority of EV cost is not coming from the manufacturers directly, but it is coming from the underlying component provider. So if EV ecosystem is supposed to grow, all the participant in EV value chain will have to grow together, because if you look globally, it is not the bottleneck at manufacturer level which causes concern in the supply chain, but it is actually the bottleneck at a battery manufacturer level which causes the concern, right? Battery manufacturing companies, lithium companies are probably one of the more sorts of established companies which have sorts of created enough wealth in this EV run up. Now, one reason why I was mentioning earlier that EV has become both push and pull, right? Pull by customer, where customer themselves are demanding, customer themselves are trying to buy EVs, and push because government is through subsidies and through a lot of incentives promoting EVs, is because on the first part, battery cost is going down. In fact, if you look, the battery costs have gone down significantly, and in 2025-26, it is further expected to go down with an overall decrease from 2022 of almost 40%. So your car battery cost will go down, and hence the car cost will go down, which will also lead to the fact that payback period for these car will reduce. It will reduce to almost 3 years by the next half of this decade. It obviously depends where the fuel cost are. If higher the fuel cost, the payback period compared to ICE vehicles will be sooner. But just because the battery cost is going down, you will see that EV payback period will reduce, right? And then you're seeing that in Indian market also. You're seeing a lot of car companies like Tatas, Mahindras coming out with very affordable, relatively affordable EV cars right now. And people are finding that it is now in a way economical when you look at the entire car cost and the fuel which EVs are going to save. When we are looking at autonomous driving also, I think audience will know that all these advancement in automation is happening. We are now seeing very basic sedans and SUVs coming out with level 1, in fact level 2 ADAS system, lane assist, driver assist, right? A car stops if it sees another car very close by. There is car connectivity, etc. So all those things are happening. Some part of global economy is in fact far ahead. We see China roughly almost trying to test level 4. Baidu especially has quite of head start in that. If you're talking about China, then globally you're looking at Google building the autonomous system, Tesla working on completely autonomous system, etc. So that is something which on a standalone basis will take some time to convert into reality. But a lot of those softwares, a lot of those engineering, etc., are getting built into the cars, right? Level 1, level 2, you're already seeing into the cars. And that is where a lot of IT companies, which are doing the research, which are building those software, which are building those driver assist and car connectivity software, are finding their role in automobile sector increasing quite significantly. Now let's talk about India, right? Because we are now launching uh, now launching EV fund which is focused on India. See, in India, the ecosystem is at a very nascent stage. And for thematic investing, it is very important to invest when the growth cycle of a theme is starting. The point is that do you believe that growth point is starting, is going to start now? I think we believe so. Because what government is doing is they are pursuing electric vehicle ecosystem development in a big manner. For example, government through PLI has promised an incentive of almost 44,000 crores for manufacturers, for component providers, and specifically out of those 44,000 crores, 18,100 crores is for ACC batteries, for building battery ecosystem in India. And this alone will somewhat call for investment of 1.2 lakh crores. And we are already seeing significant development taking place. A lot of these PLIs have already been awarded. Even on the battery manufacturing side, we see Reliance and Ola getting PLI for battery manufacturing in the first phase. In the second phase, we are seeing a lot of applicants again applying to gain to participate in this segment. In automobile manufacturers and components provider, we are again seeing a lot of players participating in that. Secondly, government is also through FAME and FAME 2 have provided subsidies of almost tune of 10,000 crores in FAME 2. So again, the push towards EV is significant. Then thirdly, government from a point of view of creating jobs, they believe that almost 1 crore of direct jobs and 5 crores of direct plus indirect jobs can be created through an EV ecosystem. So that is why they are pushing for development of EV value chain in India. Also, one very important thing is that we imported around $100 billion of oil in FY24, and transport sector contributes almost 40% of this. So by promoting EVs, government is considering that it will be able to reduce the oil bills and make our fiscal, our balance of payment more strong. Now, to do this, what government is doing, it has also reduced the GST for EVs. Now, EV cars are at 5% compared to 28% of internal combustion engine vehicles. In fact, for setting up charging station, the GST has been reduced to 5%. The OMCs are talking about setting up 22,000 charging station in coming years. So, and it has also reduced the import duty from 70% to much lower if a car manufacturer is promising a $500 million investment in India and car manufacturing set up in India. So government is doing all that. So one reason is obviously energy security. Second reason is, as I mentioned, push for direct and indirect job creation. Third reason is obviously that government is targeting lower carbon emissions, and transport sector as a whole is fourth largest CO2 emitter. Also, one very important thing is that auto sector is a significant contributor of manufacturing GDP, is a significant contributor in exports also. So government has to focus on development of EV value chain, because first it wants to reduce the dependency on imports, so hence import substitution. Second, it wants to remain an essential part of EV value chain so that exports through automotive segment does not get hampered when EV become a prominent player in the automobile segment. As you can see in the slide, it contributes almost 49% to the manufacturing GDP and 7.1% to India's GDP. So automobile sector is very important play within the manufacturing space in India. In fact, in along with defense, I feel that EV is one of the more important players when it comes to the Make in India push and other manufacturing initiatives taken by the government. If you're looking at EV penetration, now numbers are quite varied, but I'll just give certain data points. If you look at just four-wheeler sales, around 2% is EV. If you add hybrid, around 11% is EV. If you're looking at two-wheelers, almost 5% of two-wheelers which are being sold is electric vehicles. And if you look at three-wheeler, the numbers are a bit stark. So I'm like, if you look at the Parivahan website, it talks about almost 50% of registrations which were done in 2023 in three-wheeler space were electric vehicles. So that is quite significant, right? I'm like, we are in the early phase, but those numbers are stark. But also very important that government is pushing for 30% share of EVs in passenger vehicle space by 2030. That's a given target which government has given that target. Even in fact, for commercial buses, etc., the target is even more. So 30% just for passenger vehicles, and if you're looking at other segments like commercial buses, etc., the target is even more. So this is just a a line diagram which points out that how much government push we are seeing to increase the adoption of EVs in India. And so I've already talked about it, so I won't spend much time here. Now, from a projection point of view, I mentioned that when we are looking at uh, at 2030, what is the government push? Government is looking for almost 30% EV adoption. But this is one more report which has come out which talks about 20% EV adoption by 2030 in four-wheeler space. When it comes to three-wheeler and two-wheeler, it will be roughly around 45%. And overall industry around 40%. Now, I think that this number is in fact a bit conservative. I believe in government target of 30%. If you add hybrid, we are already at 11%. If your overall target of 40% of EV is not far-fetched, if you add two-wheeler, three-wheeler, four-wheeler, we are already at 8.5%. So I think that this is a growth which we can easily see in this space. Now, as I mentioned earlier, the portfolio of this fund will look at the entire EV ecosystem from upstream, which are the chemical manufacturers, to the midstream, which are the electric vehicle component providers, which are the battery manufacturers, software technology providers, and the downstream, which is two-wheeler, three-wheeler, four-wheelers manufacturers, etc. And the idea is to provide you the exposure to the entire value chain. And I'll come to the portfolio later, but if I give you a broad snapshot, at the time of rebalancing, the automobile manufacturers will have a weight of around 40%, with the top stop capped at 8%. So 40% is automobile manufacturer. So it's not manufacturer heavy. In fact, if I'm looking at portfolio right now, around 27-28% of the portfolio is non-automobile manufacturers and non-automotive component providers. So your 25 to 27% of the portfolio is actually going to specialty chemicals, Reliance, technology providers, etc., which are not in pure play automobile space, but may become or are already a significant part of the entire value chain. So you have a much diversified portfolio. You have a much broader look at the electric vehicle ecosystem, because we believe that if adoption increases like we expect it to increase, the entire ecosystem will get benefit. Now, very quickly looking at why we are talking about this, right? I think from a PLI point of view, why battery manufacturers? There's an 18,000 crores PLI outgo for battery manufacturing only. In fact, government is targeting around 50 gigawatt hours of battery manufacturing capability in India. First phase awarding has already happened. There's a second phase going on. So we expect in government of India to focus a lot on battery manufacturing, because that is a key component for EVs. We know right now that even Tata Motors, etc., are using batteries which are manufactured in China by larger players as their sorts of component for their electric vehicles, and that obviously needs to change. Now, when it comes to automotive component providers, we expect a capex of around 25,000 crores in next 3 to 4 years. We are seeing around 3% participation in revenue of EV segment within these companies. That is expected to increase to almost 9 to 11%. And we are seeing a significant participation by these players in PLI also. When it comes to ADAS, etc., again, a lot of IT companies are building up software and technologies which can be used in car. I think these technologies have become key component of new vehicles, and that is why we see the value addition which is being done by these technology companies to increase significantly. We are talking about a market size of almost $169 million in FY23 to grow to almost $1 billion in next 5 years till FY28. So you have a good plethora of listed companies and unlisted companies, while this fund will only invest in listed companies to form which are participating in this space, and we will try to capture listed companies in this fund across the value chain. Now, very quickly, I think this is very important, right? How the fund intends to capture this entire ecosystem. So the method is sorts of not complicated, but I think it's structured in a manner that you see participation of 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 companies present in different segments. So first, what NSE is doing is it is bucketing. Now, first bucket, which is Group A, will consist of all the manufacturers of vehicles, which is two-wheeler, three-wheeler, four-wheelers, passenger vehicles or commercial vehicles, all the manufacturers of these automobiles. Group B will consist of all the manufacturers of electric batteries or companies who are investing in setting up battery manufacturing plant capabilities, etc. So you not only have in Group B companies who have battery manufacturing capabilities, but who are investing in to set up the concerned facility. So all the companies from Group A and Group B, which is the automobile manufacturer, which have uh, electric vehicles and hybrid vehicles and other automotive technologies like fuel cell based vehicle present, all of them will be covered. And B, all the companies which have battery manufacturing capability or in future will have battery manufacturing capability because they are setting up the plant, etc., will be covered. Now, then what NSE will do, it will pick up top 5 companies based on market cap, which are equipments provider to EVs and new age automotive vehicle, which are raw material providers to EVs and component component providers, So 5 from that. Then 5 tech companies which are providing technology for these vehicles. And then also it will look at which company has participated in FAME and PLI, and it will also select 5 companies, top 5 companies by market cap. So you'll have 5 companies each from component provider, from raw material provider, from tech provider, and companies which have got FAME or PLI. Now, after selecting all these stocks, and right now portfolio has 33 companies, the group A, which is the car manufacturers, the vehicle manufacturers, their weight at an aggregate level will be capped at 40%, and top stock will be at 8%. For the remaining stocks which are not part of group A, the stock capping will be 4%. So vehicle manufacturers at 8%, other stocks at 4%. Group A as a whole, which is vehicle manufacturers, at 40%. Now, the reason why it is being done, why, so that there is enough diversification, so that you are selecting companies from all the buckets, like I have mentioned, all companies which are vehicle manufacturers, all companies which are battery manufacturers, top 5 companies each from component provider, raw material provider, technology provider, and one who are part of PLI, FAME, SMEV, etc. And then also at a weight level, these conditions are kept so that there is contribution from important players, right? The entire weight is not hogged by vehicle manufacturer. Only they can have only 40% weight at the time of rebalancing, and the remaining weight is spread out. As I mentioned, at almost 27% of weight in the portfolio right now is towards non-automobile manufacturers and non-automobile component providers. So towards chemical companies, towards tech companies, towards other companies from other sectors. Now, this portfolio has been exactly backdated or backtested by NSE, and I won't take much time because, as I mentioned, the theme is all about investing for the future. For the if you believe that the theme is going to do well in future, and these underlying companies will be able to capture the story, that is why you should invest in a thematic product. Backtesting is about performance which has already happened. But when we compare it with auto index, now Nifty auto index, I think this is one question we get a lot, is a 15 stock index which only invests in vehicle manufacturers and component providers. It is very top heavy. So I think there's no comparison as such with auto index because it is 15 stocks. This is 33 stocks. Here the weights are much better distributed, and Nifty auto you'll find stocks to be very, very top heavy. And like we expected from performance point of view, we have seen stocks doing well in auto space in last year especially, and in 2021, and that is what we are seeing in the performance. Also, you see a negative performance in 18-19 in this segment, and a positive performance and our outperformance over market benchmark in 21 and 2023. So like all thematic products, it will be more risky. It will have sorts of higher risk, higher reward profile. So please assess your risk profile and whether this portfolio fits into your investment objective, etc., and then decide whether you want to invest in this fund or not. And this is a portfolio, the 33 stock portfolio. As I mentioned, that you have Maruti, Suzuki, Mahindra, Bajaj Auto, Tata Motors as top stocks in the fund. But then you have, for example, CG Power, you have Reliance Industries, you have Tata Chemicals, you have Gujarat Fluoro, you have Tata Elxsi, L&T Technology Services, you have Tata Technologies, etc., which are sorts of participating in the entire value chain of EV and other new age initiatives. So you have a wider portfolio with companies coming from different sector. So just to summarize before I'll take Q&A, is that this is an offering which we are coming out with, which will provide exposure to the entire value chain, not only just auto manufacturers and component providers, but also companies which are battery manufacturers, raw material providers, tech providers, etc. The weightage is fairly well diversified. Automobile manufacturers will have only 40% weight, top stock at 8%. Other segments will have hence 60% weight, with top stock at 4% only. We are also looking at PLI, FAME, etc., so that companies which are sorts of participating in these government initiative also get sorts of presence in this particular portfolio. And as I mentioned, that this is a thematic product. It is higher risk compared to, let's say, a broad market portfolio. We hope that this product will be able to capture the growth story of EV in India, which we firmly believe in, and people who have higher risk profile, uh, who see that this product can fit into their portfolio, should only invest in this fund. And to be honest, if you're looking at current market levels, your investment in this product or any other product currently should be from a long term point of view. So we feel that EV will evolve in next 5 to 7 years, and that is what growth trajectory we are seeing for the EV ecosystem, and that is what, from an investment horizon point of view, you should look at when you are thinking of investing in electric vehicle space. So that's it from me from a from presentation point of view. I see there are a lot of questions, so please post your questions. I'll be taking some of them which are concerning with this fund. Yeah. So yeah, I think I'll take one controversial question also, because see, there's one question that there's a lot of talk of EVs not being a good option if you consider the total cost of ownership instead of just fuel. If that is true and EVs turn out to be just a passing fad, then what happens to these businesses and investment in them? I think see, it's a very good question, but every technology goes through a phase where it develops, right? It becomes more and more practical. When you started with telephones, they were huge, right? All those cordless phones were huge, and then eventually you're seeing phone size becoming more practical. You can hold it in one hand. You can do a lot of things with a phone, and same is true for cars which were designed in last century or so, and any other technology. So we, if you look, and this is, I'm showcasing a slide right now, you see all those practicalities are also already coming in EV segment also. You are seeing car cost going down significantly. There's Tata Nexon, there's a lot of cars which are coming which are actually very cheap, right? So, and also from a technology point of view, there's talk about battery recycling, there's talk about battery costs further going down, there's talk about more cell-based technologies coming eventually, which will provide an alternative to lithium ion and battery cells. So see, you can doubt a particular technology, but we feel that this is something which will continue, where the growth momentum will continue. The technology will keep on evolving. The cars will keep on becoming more efficient. You're already seeing cars running up with one charge more and more. So all these things are happening. So I think we will see EV from a technology point of view improve more and more, and that is why I believe that this is probably a right time to invest in this space from a long term point of view, because if it becomes more efficient, why will consumer go ahead and buy fuel cell based, sorry, petrol or diesel based cars anymore if EV themselves are at a lower cost, right? Why do you even need a government subsidy to push you to buy that? Yeah, I think there are questions on battery manufacturing also. So see, in India, battery manufacturing is very early, right? And I mean, most of the companies are just in a very initial phase. And what we are seeing from battery point of view, there are certain companies which are providing batteries to only two-wheelers or so. But we believe that through PLI, this is what government is trying to push in terms of battery manufacturing. Reliance, etc. When they set up a plant, that is when we'll see battery manufacturing over a time evolve, which will be sorts of comparative to what we are seeing globally, also in terms of ecosystem as well as value chain. So I've already covered what type of companies are there in this ETF. Now we have already talked about current market leaders in EVs. I cannot name the companies, but you can look at the portfolio and see those companies present in the portfolio itself. Yeah, I think this will not include any global stock. We already have a global fund for EVs. It's a fund of fund. So we already have an international fund which will invest in global companies which are participating in EVs across the value chain. That fund is now closed because of SEBI's restriction on overseas investment. I think that an option when it reopens for people who are looking for a global exposure. When will this be listed on NSE? It will be listed within 5 working days from the date of allotment. The date of allotment is on 10th, so 5 working days from that. There's one question: will you be investing immediately or when you get the opportunity making investment? So this is a passive fund which we have developed along with NSE. For in passive fund, we invest immediately. We do not take market calls from an investment point of view. There's one question about comparison between this and existing fund which we have, which is Mirae Asset Global Electric and Autonomous Vehicles ETFs Fund of Fund. I think the name itself tells you the difference. One is focused on global electric vehicles and autonomous vehicles and other associated development. It consists of companies from US, Europe, Japan, Korea, China, etc. It does not consist of Indian companies, and this is a fund which will simply take exposure in Indian companies which are participating in this space. I think there are obviously questions on valuations and alpha, whether it will generate alpha to Nifty 50, etc. See, I think if you look at auto sector performance itself, it has given a stellar performance in last 1 year. We are seeing raw material prices at a bottom, which is a very positive for the auto segments. Having said that, CVs and tractors, etc., have not performed really well, but you see two-wheelers, etc., and even four-wheelers have performed really well. But I feel that this growth trajectory will continue, but it will be at a muted pace. So while we cannot give a very strong statement that what will happen in next 1 year, but auto as a space is, from a long-term point of view, we are bullish on a very short term. I think you should take call accordingly from a valuation point of view, and if you're investing in a sector or a theme from a 6 month or 12 month, then be conscious about the valuations, etc. So I'll suggest that if you're investing in this fund, come from a long term point of view. Don't look from 6 month to 12 month horizon. So minimum amount for starting investing in this fund in the NFO is 5,000 rupees. When it gets listed on the exchange, you can buy as small as 1 unit. So there your investment quantum will be much lower. It will be under 100 for just one single unit ETF. The expense ratio, while it will depend on the final NFO collection, we'll obviously come out with guidance on that. But I think it should be roughly around 35 basis point, 35 to 50 basis point. I think there are multiple questions. I think a lot of questions. I'll be taking the ones which are, yes, all 33 companies from this index will be included in the ETF. ETF simply replicates the index portfolio. So you'll have a representation of all 33 companies. Yeah, I think there's one question that a lot of these companies are part of large cap, mid cap, small cap funds. So this is a more concentrated call, a specific fund on EV theme itself. So if you're looking for exposure in EV theme only, EV and other new age automotive theme only, you can choose to invest in this particular fund. I've already answered from a valuation point of view that if you're looking from a short-term point of view, 6 month, 12 month, etc., I think then probably you should stay away from investments in this particular scheme. We believe that your horizon should be at least 5 to 7 years if you want to take the benefit of growth in the EV segment as a whole. So yeah, I think the fund NFO has already started, so people can invest, as I mentioned, in this NFO with a minimum quantum of 5,000. If you want to buy the ETF on exchange, you have to wait for the listing, which I mentioned will be 5 working days from the date of allotment. So there's no fund of fund as of now. It will be only ETF offering. So no fund of fund as of now, just ETF. So I think I have taken. There are a lot of questions, but I think multiple of them are duplicates. You can reach out to us via our social media handles. We'll be happy to take any questions which I have not covered here. So thank you all for joining this webinar. This is a very interesting offering which we have come out with. If it aligns with your risk profile and investment objective, please do assess investment in this offering. And as I mentioned, for any queries, contact us through social media channels or write to us or contact your RM, and we'll be happy to provide more information on this NFO. So that's it from me. Thank you for attending this webinar. Please take care. Goodbye.